Hey guys, quick video here to talk about ranges within trend, a little bit about liquidity, and how these moments of consolidation can resolve. And I'm going to talk about it from a conceptual standpoint, getting into kind of what's happening behind the scenes. And so we see these kind of situations fairly often. It's built into wave theory, standard trend, right? We have a move up, consolidation, move up, consolidation, move up. And so when we're looking at the rally portion, right, what's happening here? Buyers are saying, I'm willing to pay more, I'm willing to pay more, I'm willing to pay more. They're continually pressing the buy button higher and higher and higher. Now there comes a point where all of a sudden buyers are no longer willing to do that. They say, okay, hold on. We got to chill out here. This is too high. I'm not willing to keep pressing the buy button up here. Let's pause for a moment. Okay, so price floats down. Now, if sellers aren't willing to really step in yet, maybe sellers want to sell up here, of course, wanting to sell at the highest price possible. If they're not willing to step in this low, then we're going to see this balance. We're going to see this moment where no one really is too eager to make anything happen. Buyers aren't willing to pay higher. Sellers aren't willing to sell lower. We see a range established. And of course, there's going to be some short-term action up and down within this, all over the place. But generally speaking, no one is driving this equation, this negotiation. No one is being aggressive in any way. And so how does this resolve? Well, there's two options. A, one side or the other needs to agree or concede to paying more or selling lower. They essentially have to give up. Or option B, they can be offered a better price. And so let's look at being offered a better price. Say trend is up. Say that there's a big institution that wants to get involved. They want to buy. What is the most attractive situation for that institution? Okay, would they rather just press the buy button up here and hope that buyers continue to press the buy button after them to allow price to continue higher, or would they rather be offered a better price? Would they rather be offered a discount? Let's say somewhere in here. Obviously, this is the better option. And so in terms of, big money, if you want to think about it like that, the ideal for them is to be offered a better price. And we've already seen, everyone's already showed their hand here. Sellers have already shown that they're not really willing to step in lower. Buyers have already pretty much shown that they're not willing to step in higher. And so unless that changes, okay, one side needs to be offered a better price. And so that's why when we see a consolidation and then a sweep of the lows, oftentimes that can lead to a reversal. Buyers step back in, big money steps in, it's chased higher, all of that. And all of this within the context of an uptrend, right? Within the context of, okay, we're still talking about a situation where buyers are present, they just need to be given a better price. Now, sometimes in order to get there, price has to, test higher a little bit. Price has to sweep the highs a few times. Okay, we have to see, okay, are buyers willing to pay more here? No. Are buyers willing to pay more here? No. We see this quite often, these tests, these traps. When we talk about flats being traps, this is kind of the concept where, we see price get up there, and if buyers are not willing to continue to step in afterwards, we see this trap. Okay, because sellers are also being offered a better price here. That allows them to step in the short term, bringing price back into that attractive price for the buyers. And so, when we're talking about flats, that's why we often see a trap on both sides. We see kind of like a temporary trap here. Maybe early buyers get trapped, not really, no buyers are stepping in after that. Price comes back down. The more attractive price is offered and more serious buyers step in, price is sustained. Now, does this occur every time? No. This is the cleanest version. This is the smoothest version for this to resolve, but it doesn't happen every time. Okay, going back to the other option, sometimes if price is so balanced, eventually maybe one side gives up. Buyers concede to the fact that, okay, I'm not going to be offered this price here, and they're going to have to continue to pay higher if they want to get involved. And so that's when we see these triangle breakouts. You get some sort of acceptance where we get one of those tests higher, and it actually is sustained. Buyers do continue to step in, and then we can see that breakout. Obviously, this is not as attractive, not as clean. It does happen though, and this is where we get triangles. And so those are kind of the two ways for ranges to resolve, and it really depends, especially when we're sweeping the range highs. If we see a sweep and a sharp rejection back in, oftentimes that's going to be a sign of a trap or at least more consolidation. Okay, but when we do see a breakout, think about traditional technical analysis. You hear people talk about the check back, the retest, whatever you want to call it, something like this, where price is ranging. Maybe we sweep once, do this. Okay, but when the breakout is going to be sustained, oftentimes we'll see some sort of acceptance up here, and then we can go. And so that's kind of the difference between a breakout and a bull trap. It depends on the acceptance above, the reaction above, but always what's going to be more attractive to me as a trader, and this is maybe a little bit of personal preference, right? Yes, this can happen. We can get this this breakout style move. Okay, but what's most attractive to me as a trader is what I think is in line with institutions, big money, is I want to be offered a discount. I want price to come in here, stop out some of the early longs, provide some liquidity, and get that sharp reaction, get that reversal. And then we can really squeeze. Then we can get things going in a more sustained way. So a couple of ways, that's kind of how it applies and how I think about it in terms of what's happening behind the scenes. And then we put that into the language of wave, looking for flats, looking for triangles, looking for price to be accepted or not accepted, etc. Hopefully that makes sense. Hopefully that clicks. Let me know if you guys have questions. Otherwise, I'll catch you guys later.